welcome to a new video. If it's your first time here, make sure you leave a like and a subscribe, and make sure you share this video with your friends or anyone that you know that is struggling with trading. So in this video, I'm going to be explaining how I was able to use this risk management strategy to make over $2 million from the market. So ideally, you want to have a solid strategy. You need to have an edge in the market. And if you have an edge in the market, the next thing that comes is a solid risk management, because without solid risk management, your edge becomes useless. You can have the best strategy in the world, but if you don't follow good risk management, you are going to lose money. You are not going to be profitable. So in this video, I'm going to be explaining how I always divide my account when I'm trading and the risk management strategies I follow. So ideally, you need to divide your trades into 10 trades. Let me just write it down. Divide your trades into 10. When you divide your trades into 10 trades, you need to accumulate a whole lot of data. What I mean is, you need to accumulate when I say accumulate a lot of data, I'm saying usually between 1,000 plus trades and above. 1k trades and above. So the reason why I'm saying this is because you need to accumulate a lot of data to know when your edge works the best and when your edge is most profitable and all of that. Because you can't just know just from 10 trades or just from 5 trades or just from 50 trades. You need to know when your edge works best. Sorry guys, I'm so tired. I haven't slept in a while. I've just been traveling. I was in Switzerland. It was a very, very nice trip. I think I'll start doing a vlog for you guys once the channel starts growing. So you need to be able to divide your account into 10 trades. And what I mean by that is, this is directly proportional to the amount of data you have. Because if you are taking 10 losses in a row, 10 losses in a row, you have a bad strategy. Yes, you have a bad strategy. And you need to work on your strategy. After you have accumulated your data, yeah, you find out that you can't take a certain number of trade back-to-back losses. You can't. Maybe if you accumulate over 1,000 trades, you know that you can't take 4 losses, 4 L's in a row. Yeah. Or you know that some people, they know they can't take 3 L's in a row. For me, I'll say don't take 4 to 5 losses in a row. If you know you take 4 to 5, if you know you take 6 losses in a row back to back, work on your strategy. I'll be so real with you. It's as simple as that. You should not be taking 5 to 6 losses in a row without any profit. Yes, I know what I'm saying, guys. So you need to accumulate your data, which is by backtesting or live market journaling. You need to be able to accumulate all this data and now have an edge in the market. So personally, after I accumulated a lot of data, I think this was about 10,000 plus trades. I realized that I couldn't take 4 losses in a row as long as I follow my risk management. I can't take 4 losses in a row. So whenever I'm trading, let's say I start trading an account, I don't follow the whole 1% risk management. It's bullshit. It's fucking bullshit. You are not going to make money. I know that it's impossible for me to take 6 losses in a row. It's literally impossible for me to take 6 losses in a row as long as I know what I'm doing. Yeah? So what I usually do is I'll divide my account into 10 trades. 10 trades. Let's say if you have $1,000 capital. If you have $1,000 capital, this is just an instance, guys. If you have $1,000 capital, the maximum you should be risking per trade is $100. And I'm not just saying just if you don't know how to trade, if you don't have an edge, just jump into that. Nah, that's not what I'm saying, guys. You need to have accumulated all your data before learning how to divide your account into a certain number of trades. So after accumulating your data, the first step is to accumulate all your data by journaling. Yes, if you're not familiar with what journaling is imputing all your trades into one system. And the best tool for that is TradeZella. Yes, I have TradeZella subscription. Any trade you take, journal it, write down the reasons why you took the trade, take a screenshot of it, journal it into your TradeZella software, and when you look back, you'll see that you have a lot of data you can look into. So first step is to accumulate data by journaling or however you want to accumulate data, however you want to do. I'll say 500 trades to 1,000 trades. Yes, because you can't just use 5 to 10 trades to accumulate data. You can't use 5 to 10 trades to accumulate data. You need 500 to 1,000 trades and above. And then once you understand your whole system, once you understand the amount of losses and the wins you are taking in a row, the next thing is to divide your account into 10 trades. So I'll quickly just remove all this. Divide your account into 10 trades. So if you have $10,000 capital, max risk is 1K. You need to be risking $1,000 per trade if you have a $10,000 capital. And if you have $1,000 capital, you need to risk $100 per trade. And if you have $100 capital, if you have $100 capital, you should be risking $10 per trade. Because, as I said, once you've accumulated data, you shouldn't be taking 4 to 5 losses in a row. You shouldn't be taking 4 to 5 losses in a row. And if you're taking 4 to 5 losses in a row, go back to your data and refine your edge. So if you're following the system, the normal system of accumulating data and dividing your account into 10 trades and not changing the risk management, don't change the risk management when you're still building the account. It's impossible for you to blow the account. It is impossible for you to lose the account if you follow what's necessary. So, and by the way, guys, if you want to work with me one-on-one, make sure you book a call and then we'll get started. I'll leave the link down below, my Calendly link, so you can book a call with me. So, if you divide your account into 10 trades and you can't lose 4 to 5 trades in a row, and you trade risk to reward. This is a very, very important part. You trade risk. Let me just type it out. Risk to reward. You have to always have a risk to reward of minimum 1 to 2 or 1 to 3 Yes. Meaning if you are risking $1,000 per trade, if you are risking 1K per trade, the minimum you should be making from the trade is 2K or 3K. That's the minimum you should be making per trade. Why? Because even if, let's say, you take 3 losses, you've divided your account into 10 trades, you have $10,000 capital. You've divided your account into 10 trades, and you've taken 3 losses, and then you risk 1K, still following the normal risk management, and you risk 1K and you make 2K or 3K. Just that one trade has made back for 3 losses. One trade has made back for 3 losses. And if you even trade a higher RR, one trade has made back 3 losses with profit. That is why risk to reward is the most important in this strategy. Once you have divided your account into 10 trades, make sure you have a very good risk to reward, which is ideally 1 to 2 or 1 to 3 risk to reward. Yes. There are times where you see me trading a 1 to 5 risk to reward, or 1 to 7 risk to reward, or 1 to 8 risk to reward. But most of the time, my minimum risk to reward is 1 to 3 or 1 to 4. But for you guys, go with 1 to 2 or 1 to 3. I'll say stick to the 1 to 3 risk to reward, because you're going to make back for a lot of losses. So if you take 4 losses, let's say you take 5 losses now. You take 5 losses. That means you're down what? You're down 5K. We're using $10,000 as an example here. If you take 5 losses and you're down 5K, 2 wins will cover your losses with profit. So let's say you're taking 5K loss in 5 trades and you are down 5K, and then you get your first win, which is $3,000. You get your first win, which is $3,000. Wow, good. You're now down 2K. You take another trade and you win again. You smash take profit. You're up 3K as well. So just these 2 trades has made back for your 5K loss. Your 5 losses. 2 trades has made back for your 5 losses with what? 1K profit. Guys, ignore what I'm writing on my screen. one trade has made back for 5 losses, guys. Two trades, sorry, has made back for 5 losses. Two trades has made back for 5 L's. So you need to always make sure you're trading a good risk to reward, because if you're trading with a 1-to-1 risk to reward, guys, a 1-to-1 risk to reward, you're not going to be profitable with this strategy. I'll be so real with you. Because if you're trading a 1-to-1 risk to reward, if you risk 1K to make 1K, that is not profitable in the long run. So the minimum you can even trade is 2 risk to reward or 3 risk to reward, because the moment you have 2 back-to-back wins, you are going to accumulate. You are going to cover for your losses, for your 2 losses. So this is personally the risk management strategy that I follow, guys. And if you want to work with me one-on-one, make sure you click the subscribe button and like the video and book a link with me. Book a call with me so we can work one-on-one. I've been able to change a lot of traders' lives, and I just started doing YouTube now so I could spread more information to you guys. And big things coming ahead, guys. And make sure you join the free Telegram link in the bio. So cheers, guys. If you found it really helpful, please leave us like and subscribe. Cheers.